Breaking news, JPMorgan Chase beating earnings and revenue expectations this morning. This coming as Citigroup and Wells Fargo are slated to report their quarterly earnings in under an hour. JPMorgan shares are off of the highs of the morning, but still showing a gain of 0.5% right now. Joining us right now on the telephone is the president of Mendon Capital Advisors, Anton Schutz. Anton, great to talk with you this morning. Thanks for joining us. Give us your take on the numbers at JPM.
Well, I think overall a good quarter. Always something to be happy about and something to poke holes at. But I think, given positioning, I think the stock should do pretty well today. The capital markets were very strong. I mean, they really globally, they're number one. They posted incredible beats on investment banking and FICC. That's the really good stuff there. People looking at interest rates, margin, boring, nothing great. Fed's increasing rates, they're really not benefiting. You look at competition, you look at things like credit cards, and those affinity programs, reward fees are very, very expensive, and there's some charges in there. But overall, a good quarter, and I think the bottom line is the group is really beat up, very high dividend yields, and the massive buybacks from the entire group start, very, very soon, like next week for JPMorgan. So I think focus on return of capital here.
Anton, my question to you is we've seen core loan growth was up 7%. The estimate was 2%. We saw equity trading was up 24%, which blew past any expectations. Where do you see the second half of the year for the banks? I mean, this is done exceptionally well, but now we can't look in the rearview mirror. We have to look forward. What do you anticipate the catalyst going forward for JPMorgan as well as some of the other banks, and can they sustain this growth that they've showed for the second quarter?
Sure. I want to reiterate the point I just made, which is I think capital return are so massive that I think the stocks will actually behave pretty well. From catalysts going forward, you mentioned loan growth. That's obviously, we've all been looking for it. The animal spirits were all there. Where's the growth? Well, we've got a very good GDP, this quarter or trailing quarter, and I think really comes down to the whole tariff thing and how confident businesses and consumers are. Jamie Dimon did say it in his notes that, businesses and consumers are very confident. And that's, that's going to relate to more loan growth, and that's really going to be the important driver going forward.
Hey, Anton, this is Gary Smith. A different kind of question. In the financial, in the technology area, in fact, across the board, we've seen big disruptors, Amazons, the Netflix, the Ubers. It seems like in the financial area, though, we keep having the same old players. Not that that's bad. That's probably good based on these earnings. Do you see any disruptors in the future in financial like we've seen, like I mentioned, in all the other areas across the board?
Yeah, great question. Obviously something that, as financial analysts, we have to really keep a pulse on. But the important thing here is there's amazing barriers to entry. Getting a bank charter and the regulations that come with it, every large tech company has tried to figure this out, beyond the fact that you need a ton of capital as well. And so if you look at some of the disruptors that have tried on the lending side, pretty tough, for the on-decks and the lending clubs. Those have not done so well. And the banks themselves spend an incredible amount of money on technology. All of their tech just keeps getting better. The budgets for technology at the JPMorgans and Bank of Americas and cities are all exceed, like $10 billion a year for each of them. And those are massive amounts of money as they keep up. And obviously all the innovators are out there, packaging things to the smaller banks. So, I think what we all get as consumers and businesses is better and better and better from all of them.
Dagan, look at the stock. The stock is up 52% since the election, Dagan.
Yeah, thank you. A better economy and a deregulatory environment. Anton, it's Dagan. If you look at the world of the financial stocks, do you have a sweet spot? Do you have a favorite in terms of market cap? Because you mentioned the small institutions. Is there anywhere on that kind of spectrum that you really like right now?
Yeah, really, really great question. I still think sort of the advantage at this stage of the M&A cycle are the sort of banks with $3 to $5 billion in assets. They've got a pricing advantage. They're able to buy smaller institutions favorable to their own shareholders, and they're able to grow quickly in niche markets. So think of geographies like Tennessee or Texas or Florida, which don't have any income tax. So lots of in-migration of people, lots of really good growth and deposit growth. And you can buy deposits in rural places. I mean, the cost of deposits in places like New York City or Miami is very high. But if you go to rural places, the deposit cost is much, much lower. And I think that there's a real advantage to some of the companies that size that can be nimble. But I also like the big here. They've been beaten. You mentioned the number since the election, and very true. They've really gone up substantially. But if you look at it versus the S&P, the banks are historically cheap as a group. They've been down substantially over the last month or so, and the return of capital is enormous. So I think you can actually look at a barbell. I think you can own the very big because they're cheap. The return of capital, the dividends, buybacks are enormous. And I think you can own the small that have catalysts to grow. I think you can buy banks in places like I said, like Tennessee or Texas.
And one catalyst obviously could also be a takeout for some of those smaller names. Anton, it's always a pleasure to talk with you. Thanks very much for your insights this morning.
My pleasure.
We'll see you soon, Anton. Thank you. Anton Schutz joining us, Mendon Capital.